Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 19th of August. I'm Daniel Lam, your host for the podcast. Yesterday, we highlighted the favorable setup for US equities from the various macro tailwinds. But we also discussed the expensive valuation there and suggest rotating the excessive long positions into Asia ex-Japan equities. Now, Chinese equities is very important to that index as it takes up 1/3 of the weighting in MSCI Asia ex-Japan. The second quarter earnings season in China is in its early days, with 10% of MSCI Chinese companies having reported, and so far it has delivered a 3.5% positive earnings surprise. But actually, 1/3 of the Hang Seng Technology Index have already reported, and they've been delivering a 5.3% positive earnings surprise. Internet and technology companies are reporting strong growth in online and mobile entertainment, as well as demand for AI infrastructure. AI adoption continues where it enhances mobile app features, supports software development, and sharpens digital marketing. This is helping the increase in CapEx with a focus on spending efficiently. Now, the potential relaxation of US chip export rules will further support AI in China. This would lead to a catch-up and narrowing in the valuation gap between the Hang Seng Technology Index and the Nasdaq 100 Index. AI development would also support the broader Chinese equity markets, where valuation remains at an attractive discount to global equities. We're expecting policy stimulus, as well as the recent plans to support bank lending to consumers, to continue to stabilize Chinese growth. From a technical perspective, the Hang Seng Technology Index faces resistance at the 5,800 level, which is roughly 4% above current prices, while there's strong support 5% from here. Investors can consider adding exposure by scaling into the index, as the index has the potential to retest the March highs, which is 10% above the current level. That is all from me for today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.